Hi everyone, this is a video for 6-4B. What we're given is a partial 10 column worksheet, and then we're told that we need to create T accounts and then create the closing entries for this company. So the first thing we have to do is use the chart of accounts and enter everything into the worksheet that we're given. So you're just going to go down the line, put them in whatever order you would like. I find it easiest to try to group them by whether it's an asset, liability, etc. That way it's just easier on yourself. Make sure you enter things in correctly. Make sure you use the actual account name given in the chart of accounts. I'm going to pause and go ahead and finish entering in the information from the chart of accounts. Okay, now that everything is entered, all of the accounts are made into the T accounts, we're going to enter in the information from the worksheet. So for example, on service fees, we're going to find it on our Excel spreadsheet. Let me zoom in to make it a little easier for everything to be seen. Service fees, it has a credit of $4,813, so we're going to enter that in. And then we're just going to keep doing the same thing with the rest of the accounts, making sure we pay attention that we're entering it on the correct side of the T account. So now we're just going to go down the row, and then once we finish the income statement, we're going to go ahead and do the same thing for the balance sheet. I'm going to go ahead and pause the video and finish entering that information in. Okay, now that everything is into the T accounts, we can start with journalizing the closing entries. This is what's going to help us figure out how we close the accounts. So the first thing we do is we're going to need to know the date that we're working with. So if we go back to page 209, which is the page the problem's on in the textbook, it shows it's month ended June 30th, so that's the date we're going to use. So it's going to be June 30th. The first thing we close is our revenue account. So let's put the date too high. We're going to put in the description closing entries, and that's going to be centered on the line. We're going to put June 30th. Our revenue account, in this case, it is service fees. It's going to be service fees. We're going to credit income summary. So we're going to do the opposite. Since the balance is $4,813, we're going to type closing 4813. That's going to get the account to a zero balance. And we're going to enter 4813, 4813, and then we're going to enter that into the income summary as well. So it's going to be closing 4813. You can either do all of the closing entries into the T accounts at once, or you can do it little by little. It is completely up to you. The next thing we have to close is the expenses. So we're going to be debiting income summary to show that we are decreasing the amount that we actually have in that account. But we're going to have to list each expense individually. This may be a good time to go back to the chart of accounts. So we're going to do wages expense, Literally, you're just going to go straight down the line. Again, make sure you use the full account name. And then we're going to go over to our expenses, or if it's easier, just scroll up to the top of your page and you're just going to enter in the amounts down. So 1080, 34, 900. I'm just going to go straight down the line. Okay, and to get the total that we're going to debit income summary, we are just going to have Excel add the numbers up for us. So we're going to debit income summary for $2,987. And then we're actually going to have to go through each expense account and show that we are zeroing the expense account. Expenses are temporary accounts, which means at the end of each accounting period, the account is brought back down to a zero balance. You still need to show me that there is a zero balance. So you would do the balance and then zero. And you could just copy and paste that amount in between the expense accounts. So once you finish that, closing the expenses, you have two more steps to close the rest of the accounts. You're going to have to, let me go back to the example in the textbook, income summary to capital. So we're going to have June 30th, income summary, capital. And again, you would use the full name. And the last closing entry we would have to do is the capital account to the drawing account. Again, use the full names. So let's go back to the problem in the book. I'm going to go ahead and pause and finish out the expense accounts. That way we can see what we have left to do. Okay, now we need to see how much it's going to be to close the income summary to capital. So what we're going to do is we're going to open our calculator. We're going to take $4,813, subtract the expenses of $2,987. That is going to give us $1,826. So we're going to debit that amount, and then we're going to credit our capital amount for the same amount. So we're just going to put closing, 1826. That gives us a balance of 0. In our capital account, we are going to credit, we're going to increase our capital by the same amount. And then the last thing we have to do is close the drawing account, and that is $2,000. So we're going to decrease our capital by $2,000 and decrease our drawing by $2,000. It's going to be closing for $2,000, closing for $2,000, and then we have to find our final balance in our capital account. So we have our $6,000 plus 1,826 minus 2,000. That gives us a final balance of $5,826. And that is all that you would do for 6-4. If you have any questions on it, let me know, and I hope you have a great day.